This is Eric Mother.com with another quick educational video for May 12th, 2021. There are your markets, and it is starting to smell like the season. And you know what that season could end up being. Because frankly, we've had a big run in all asset classes, as I've been saying, and I need to say this one more time. Just as the US markets, if they decide they are due for a major correction, expect your cryptos to follow. In fact, expect them to plunge even more than the general stocks. That's just what's going to happen. They've also been in a season of plenty, but this equation can very swiftly change. Now let's take a look at some chart examples here. And just to remind you, if you own any stock that is showing signs of a failed breakout, here we have an instrument here that failed to break out. As we can see here, this is the weekly. It had an attempt, closed above it, and then the breakout failed. Okay, now that in itself was a warning that things were not sitting properly. Now that's at a price of about 17, now trading close to 8. And it all began here with this failed breakout signal. Remember, failed breakouts are notorious for taking instruments lower. And for sure, by the time it starts breaking down again, below the weekly closing low there, it was late, but even that in itself was a fresh sell signal. So if you are looking to not ride the market lower, if the market is primed for lower prices, some of these things need to be addressed. Let's take a look at another one here, ARKK ETF, and we can see here, if you take the weekly levels, there is a failed breakout right there. Not the best example, but at any rate, we can see that there is a fresh look. It is now below recent weekly closing lows. So if you are looking for confirmation that this could deteriorate, has the opportunity to deteriorate if it wants to, there is another signal. So the only way to correct this, and it is possible, is by moving above the break line, which is the recent weekly closing highs. Excuse me, weekly closing lows from March right there. It would need to recover back above that level to stabilize this instrument. Otherwise, it is pointing down. And lest we forget, the perspective here is we've had a big run since the lows of early 2020. And we've been due for a long time, by the way. Due for one of this. It's just the other side of a market. Let's take a look at another example. Kind of extreme, but it's an example nonetheless. CCXI. Let's go back to this breakout attempt. There's a warning right there, guys. Come on. Many weeks of an attempt to move above the prior weekly closing high from 2020, early 2020. Ultimately, we can see could not hold these levels after many weeks. And this movement right there, that red bar, was your sell signal. Now, if you missed it for some reason, don't know how, but if you did, take the lows there, draw a line as the last line on the sand. I talk about this. It's the second wrong. Boy, it broke again below it. There was your sell signal at about 45 weeks ago before it plunged to 10. 45 sell signal, now at 10. How many warning signs do we need? Let's take a look at another one here. APPS. Recently, in fact, I remember I was recommending this for paid clients as a breakout candidate, but boy, after many attempts, and remember, we talked about the fact that the market had become delusional as of early 2021. It was very delusional. And of course, when delusion kicks in, some dose of reality is just upon to be unleashed. Now, take a look at this weekly lows here, if you're looking for confirmation that the base is breaking down, well, it did break down last week, right there, closing below that range. That's a sell signal. What happens next, who knows? But you don't want to be, or I guess you can choose to be, but generally that's not a good look. Let's take a look. Remember when the SPACs were the rage? Like, what the heck? Remember them? It's a fashionable trend of the day. How long has it lasted? They are not trading at highs, are they? No, actually, they are trading at 52-week lows. They've never been a trend that sustained its quote-unquote feverish bullishness forever. Ultimately, the market does rebalance. Now, this is a daily. It's an IPO from late 2020. If you take this daily closing high, excuse me. I know you can't see it, but if you take it as a breakout level, and this is not fair in a sense, but it failed to break out is the point. Tried to break out there, but failed. All right, I've just zoomed in again so we can see it clearly. There's a daily closing high there. And there was a breakout attempt that failed. That was a warning sign. We can use it for study. There's a daily closing low there. You would go on to break below that range. So this ETF, in essence, once it gapped down and broke down, was telling you that the spark fade was essentially on hold, if not on sell, right there. So again, watch out for those failed breakouts. It's a market telling you that the momentum is not there. Let's take a look at one more. Recent IPO from late 2020. There's a breakout attempt here. In fact, I remember I was recommending the breakout early in the year here. Broke out, but subsequently just could not hold. Broke down here on this week. So there's your failed breakout. And if that wasn't enough, well, you can say, you know what? I'm going to wait a little bit more to see whether it can move back to new highs. You know, market's been hot. The Dow is at all-time highs, so why would I sell? But, okay. Then you see this. Now, that's your second red flag. And if you're not paying attention, then the market does need to show you that you can't reward breakdown or failure to hold your foundation. So irrespective of how the market trades, be on the lookout for failed breakouts and violations of any base formations. Those two things can set the stage and do set the stage for major reversals. And so it is. Eric Moore with Mother.com. Love, light, light, love. Namaste.